Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment the market is rejecting to the upside a quite strong historical structure, support and demand area. From here, in fact, all these previous rejections to the downside were created. So every single time that the market tested this zone, it got rejected to the downside quite aggressively. And what we can see now is that the market has broken back above that zone. So all this previous resistance is now turned support here. The market has already tested it as support after the break to the upside. And now it is in the process of rejecting this level to the upside. And we have been going for quite some time. So from a monthly standpoint, at the moment, everything is extremely bullish. The market has been rejecting the level to the upside. And until we will see a slowdown to this impulse to the upside, this market could easily continue higher. So let's keep that in mind and drop down on the weekly time frame. Now, from a weekly standpoint, what we can notice is that we just had a clear example of a break away from a range. So essentially a breakout pattern away from a weekly range. In fact, we can easily identify here this area as being the weekly range. In fact, if we do like this, we can easily see how the market clearly was ranging in between these two levels. And when you see a range, at some point you expect the market to either break below or break above. And usually the breakouts follow with a break to the upside, close above the zone, correction back to the level, so retest of previous resistance, which at that point is turned support because previous resistance in the market, once it is broken to the upside, becomes support, and then the market is supposed to continue higher. That is usually how range breakouts play out. And in fact, that is exactly what the market did. In fact, we saw first the close above the zone, confirming then the break above the range, and that is the moment in which all the previous resistance, which was at this level, was turned support. Then the market went and retested the level here with this candle. We can see there here a perfect retest of previous resistance turned support, and then the market started rejecting this level to the upside, and at the moment it is still rejecting it to the upside. So on the weekly, everything is very clear. Let's keep this in mind and drop down on the daily time frame. Now, from a daily standpoint, this is where things, at least at the moment, start to get a bit more complicated. Now, before we dig deeper into what we have from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. And I also spoke about gold quite a few times in the past. Just a few days ago, I spoke about it when the market was around this area and I explained all the reasons for which we could expect this impulse to the upside. And then again, after this impulse, I explained all the reasons for which we could expect first a correction to this level and then the continuation to the upside. And again, that is exactly what the market is currently doing. And by the way, I will link in description these two previous analyses so you can go and check them out for more free education. But as I was saying, before we dig deeper into the technicals that we have at the moment here for the daily time frame of gold, first, let's go and see what we have when it comes to the commitment of traders. So the COT data, so essentially what hedge funds and the big players in the market are doing on gold. Now, if we check data here for gold, we can notice how with the last reports, net positions have been clearly increasing. We went from having 238k net positions all the way up to 291k net positions. So we had a clear increase of the net positioning. And this means that essentially institutions are moving back to the bullish side for gold. We can see, in fact, how we went from having if we look all the way back here, we can see how we went from having only 211k longs all the way up to now 355k longs. And even in the short term, we can see how we went from 298k longs all the way up to 355k longs from an institutional perspective. At the same time, we have seen a slight increase of the shorts, but nothing as massive as the long increase, which in fact, it currently shows how there is a massive positioning to the bullish side from an institutional perspective compared to a very small positioning to the bearish side for gold from an institutional perspective. In fact, at the moment, institutions are sitting with 355k longs, which is one of the biggest amount of longs that they ever had, compared to only 64k shorts. So very low amount of shorts compared to the long side on the institutional side of the market, so the non-commercials. Now, let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. Well, from a daily perspective, at this point, the situation is quite clear. We can see how the market at the moment is testing exactly the previous high. Now, until the market will remain below this previous high, it can easily be rejected to the downside because the structure at the moment is bearish until, well, is not bearish, but is not as bullish until the market will remain below this high. Because right now, it seems like the market is finding resistance at this zone. So this could easily be at least a local top. So this resistance area is incredibly important. Only if the market will manage to break above it, only at that point, all this previous resistance would become support, and at that point the uptrend would remain intact, with the market continuing to potentially create daily higher highs and higher lows. So if there is a break above the zone on the retest, this is where there is good probability of seeing more institutional longing, which at that point could further increase the probabilities of a potential continuation to the upside away from this level. So if this market will break and then go for a retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.